I personally believe that U.S. Americans are unable to do so because some people out there in our nation don't have maps, and I believe that our education, like such as in South Africa and the Iraq, everywhere like such as, and I believe that they should, our education over here in the U.S. should help the U.S. or should help South Africa and should help the Iraq and the Asian countries, so we will be able to build up our future for our children.
Thank you very much, South Carolina.
Good morning, everybody. It is 5 a.m. over there on the East Coast, as many of you are still asleep because nothing really matters until the stock market opens up, but does it really? I got the futures for you up here on screen, and we are right back at yesterday's highs, a little bit higher over there on the Dow, right essentially at the highs over on the NQ. Little tiny right at action over on the ES, and fractionally higher over on the Russell 2000. And yeah, you know what? I'm going to be moving. There is a gorgeous, where are we? I'll find it later, but I know I've got it here somewhere. Yeah, here. There's a gorgeous 4-bedroom, 2-bath, I think it's like 180 square feet for sale in Shitland, Illinois for 175 grand, and I am probably going to get in touch to pick that up because of where I am, my timing is off. We threw out the Monday into the close, June 3 risk time, 59.15, 59.10 calls, 350. Adjust your risk according to your comfort. And at 4 a.m., a little bit less than 24 hours ago, the markets were down. S&P down a little bit better than 0.5%. That's why I replied, you're down $1.50 so far. So on your $1.50 risk, you're down $1.50, which mathematically calculates out to where I come from, 100% on the trade. However, that did not last. And why didn't it last? Well, Marco Kolenbeck puts it together really good. The rally today is a bizarre combination of the AI bubble is back and she will call. Should be faded, and Elon's tweet is very good. And I wouldn't deny any of that which he said. And to bring you on to the AI bubble is back, it's right here. It's with CoreWeave, which CoreWeave, we've covered. I'm not covering it again. I'm not going to track CoreWeave. And CoreWeave, here it is after the IPO sometime over here early in March, with the squeeze yesterday pushing it from 112 all the way up to 160, thus inflating a lot of the other parts of the AI bubble. And here's your AVGO coming off of earnings, which were what? No, earnings are coming up later this week. Your big AVGO, and again, do what you want with any of that stuff, because I kind of tried to already give you a heads up about all of this with the options that were coming out when we went into this in the weekend. Bullish Wave 1, 2, 3, 4 from the April 21, 5101 bottom are completed, and the final Wave 5 of this Bullish Wave 3 will target new all-time highs, is completed, failing, or due to complete, plus 30 points higher above 59.68.61. Yesterday, we made it to 59.81.35. So, of that 59.68.61, 59.81.35, you can reduce 13, 14 points. So there's still 15, 16 points that we can get to the upside. But realistically, 6,982 is your big headline number that's way up there. And as of right now, we are up 1.14% year to date. But more importantly, we're up 1.25% on the month of June. And your most important number for the month of June is going to be that 58.96.68 where we opened up. Now, I will make it very clear that I am not calling for a red month of June. I am not calling for a red month of June in any way, shape, or form. But what I am calling for is for some volatility to be coming into this month of June. So yesterday's he might call, he maybe call. No safe edge hit, upper or lower. No plus 1% intraday. However, as you come over here to the futures and you do your mathematical calculations, you get a 500-point move, greater than 1% over there on the Dow, a 360-point move, almost 1.5% off of that 4 a.m. low. Here, a 90-point move off of that 4 a.m. low over here on the ES. 90 points. Damn near 2%. And a 58-point greater than 2% move over on the Russell 2000, which is really showing some beautiful, courage, let's call it, as the IWM's up here near to 210. So, again, just to give a quick recap as to what we've been going over for the better part of 2 weeks already, moving on to 3, right here in this gray circle, which I can make bigger just so that it's more visible. This gray circle being where our Fibonacci spiral top date came in, just like the one down here for our bottom. And what did we get? We got a little 3.3% dip, but we haven't gotten anything else off of that. We've been tracking sideways for the better part of 3 weeks now. And I tried to share that with you yesterday, showing you in this gray highlighted area, the 59.10, 58.75, how I like 58.910 for my risk because it's been a great pair. Hundreds, 150%, couple of 200%. So fuck it, yeah, keep risking it. Throw the same money at the same card. Yesterday you got your blow up all the way up here to 59.8135, and it's, oh wow. Well, do a little bit of work on this. Now having had some more data that we can look at, and come off your 58.43, which we are looking to call that as the 2 bottom, the 2, having already had the 1 going up to 59.68. A 1, a 2, and now Intra-Day researching nano waves onto this. We've got a 1, 2, a 3 topping out here where the 200 and the 150 extension from 2 different drawings combine right at 59.82, 59.79. We fit right in the middle of that, so that fits very perfectly. This wave 4 on the dip yesterday down to 59.60, I don't know. I do not know. I don't have the answer for that. But we have been having a lot of ABC, 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 ABC. So is this an ABC like all the other ones? We do not know. But what we are looking at still is the same things. Now, having had this placement, 59.59 being the lows on the dip yesterday, already having had that 59.68 going back, how many, 2 weeks ago? On the Fibonacci spiral date on May 19th. That's your warning level, 59.59, 59.68. We filled all the gaps to the upside, so forget about that part. But that's your warning signs right there, is do we break down below those? And if we do break down below that 59.69, call it 59.59, then we're looking at our old resistance area of 59.37. Hang on. I've got Tick Strike and the news on, and I forgot to turn them off. My timing is off. Maybe it's because I'm in the Philippines and I'm not in the United States. So over on the QQQ, again, same view. I like this as a 1 or an A because we've been getting a lot of those. And here the 2 or a B because we've been getting a lot of those. No thanks. Turn off. There we go. 1, 2, A, B. This is going to be your wave 4 bottom, and we are looking for wave 5. We have our 1, we have our 2. Our wave 3 will top out around 543, and then we get our wave 4 dip down to 541, and then we get our wave 5 rally up to 618. So 618 should be the top for the QQQ, and we should reach that in about 3 to 5 days, around 618 on the QQQ. So again, here we are at 528.61, 528.61, 528.61. We've done 528.61. I don't know how many countless times going back prior to the all-time highs being placed, and 528.61 having paid 11 of the 12 times that we've played it. This is number 12, so perhaps my timing is off. But on the IWM, this is where it is getting a little bit frothy because it is the IWM number one, and you are starting to reach up into that plus 210 area, which is where you start to get a little bit frothy. So on the IWM, I would be very cautious. If anybody is still looking to be long, I would not buy puts on IWM only because you are dealing with a little bit more strength than what you're used to, because now 207 is where your support level is, as you can see back here, as you can see back going all the way back to last year and watching how this trades when it does fall out of the 210 area. You've got one 210 visit. One. And that was back here on May 16th. May 19th was our Fibonacci spiral date. You haven't been in the 210s since this all began way back here at the end of February, early part of March. So be very, very, very careful about how you like to trade IWM to the upside. So other than that, like I said, I sent you out your update yesterday after those alarms started getting triggered. Tuesday, I gave you the bullish case, which again, until we've been proven otherwise, like I shared, SPX breaks 59.69, 59.59. Then we're looking at 59.35 plus or minus 5 to prove. Fail there, we're back to our old 59.10, 59.85. And we're doing it now with 4 hours that have grossly embedded sell divergences within them, having had very weak oversolds on our little dips that we had going into last week. And we repaired our 1 hours. Our 1 hours on the SPX and NDX. NDX being the AI bubble squeezer, got up into the all overbought area. So we've got that. We've got over here our SPX is recovered. We're back up into the 70s, the 80s, never reached into the 90s, but now we have a little bit of juice that we could actually have a proper dip. And a proper dip meaning with the QQQ now up 2.53% year to date, and this run having been 31.9% all the way up to 530.77, which showed in pre-market hours. I wish you the best of luck for being long, although having the bullish put credit spreads being one of the riskier trades that are out there. Whatever floats your boat, by all means, jump on that board and catch that wave, because you never know. It might just be one of those days where you're sitting there looking at it and thinking to yourself, you know what? It's just a little bit too much energy to go and put $300,000 at risk to make 20 grand so that I could tell somebody to go fuck themselves.
I want to explain the big cycle just in, very simple terms. The big cycle is like the period from one period of great change and turbulence in which various systems or orders are changed through fighting, typically. And then through that evolutionary process, there is a process that gets us to another period of breakdown. The last big cycle began in 1945, at the end of World War II. In that world order, there are shorter term cycles, like the economic and political cycles. The economic cycles have lasted for about 6 years, from one recession to the next recession. And they transpire in a way where, the economy is weak. Central banks put a lot of money and credit into it. That causes markets to go up. There's a lot of spending. It gets too hot. Inflation rises. They tighten monetary policy, and that causes the economy to go down into a recession. And since 1945, there have been 12 and a half of those. And we sometimes don't pay as much attention to the big cycle when they reach excesses, such as debt excesses, because debts rise relative to incomes like this. If you were to look at a chart of most countries, their debts keep rising relative to their incomes, but the incomes are needed to pay the debts. And so when you get to a point where the debts are high relative to the incomes, and debt service is very expensive and starts to crowd out other spending, and investors do not want to hold the debt as much because the debt does not provide them the good returns, and they start to sell that debt, you begin to have a change in that big debt cycle. And that big debt cycle typically corresponds with the big domestic political and social cycle, because wealth and well-being matter to people. And when there's disruption to the wealth and well-being of that, then you have the political disruption, such as what we're experiencing now. And so there's more fighting over wealth and power and so on. And these things come together. Then that creates the new conflicts, the new big conflicts, the changes and breaking down of the old orders, the old monetary orders, the old domestic political order, the geopolitical order, and such things, to cause a seismic shifts. These periods are periods of great risk. They're great risk for the markets. They're great risk for the society. It's very important that they're understood. So that is the world order and the changing world order and the big cycle in a nutshell.